Hi, I'm Katie Roering.
And I'm Eric Roering.
And we're the founders of Fontana Candle Co. In 4 years, we took our hobby of making candles in our basement and selling them at craft shows and makers markets, and we turned Fontana into a nationally recognized e-commerce brand. This year, we are doing 7 figures of revenue and have 12 employees. So how did we do it?
Welcome to the Candle Couple podcast, where we'll share the nitty-gritty of scaling our e-commerce brand quickly. We are spilling the tea, so hopefully we can help you scale your brand quickly too.
This is episode 16, how to calculate your margin per sale. All right, Eric, this is going to be your episode again. We're at numbers, and I see a spreadsheet in our notes, so
Yep.
I know this is all you.
We'll post this on the website again on YouTube so you can see it and follow along, but we'll talk through most of this.
So yeah, if you're on Apple Podcasts or Spotify and you want to see the actual visual that we have, please go over to our YouTube at the Candle Couple podcast on YouTube and you'll be able to see the entire presentation. Now, Eric, can you explain a little bit about your background and why you're qualified to talk about things like margin?
So I went to school for accounting. After graduation, I worked for a major corporation doing accounting work for them. So I've never done public accounting. I've done all private sector accounting. Then I did study for my CPA. I did pass all 4 sections and did get my certification and was a CPA. I am no longer a CPA. I am not a practicing CPA.
Inactive.
And I am inactive as a CPA, but I do have a lot of that background still and really try and pull off of that. When we talk about pricing, we are talking about pricing for the candles. We aren't getting into tax strategies and income strategies and market research.
We'd be talking for hours.
Yes. There is more podcasts coming on that, but
yeah, we just paid our taxes. And even though like Eric has a background in accounting and taxes and all this stuff, we still hire a CPA to handle all of our business taxes because at our level now, multiple 7 figures, like it's so complicated.
Well, and we had an accountant forever. We've always had an accountant.
Yes, we have.
So no matter how big we were at, we always had an accountant. We met with him regularly and had strategy meetings with him, all sorts of meetings with him of figuring out how do we move forward with our business.
Yeah, how do we manage our cash flow?
Right.
Like it's an art and a science, and we can't give that to you in these 20-minute episodes.
No, our pricing that we talk about is how we've done things. Please talk to your financial professional for your situation and your tax strategy.
And do your own market research. Yes. Like we're talking about our brand. This is what worked for Fontana. This may not be what works for your brand.
You have to do your market research to understand what you can charge for your product and the perceived value of it.
Where you're going to be selling it.
And where you're going to be selling it. This is how we do it. This is how we run our business. This is how we price it. There is a lot more that goes into a pricing strategy, looking at market competition, whether it's a new launch, whatever. We are talking about our costs and how to make sure that the costs are covered that we deal with in our business.
If you have not listened to our other episodes, our business is primarily an e-commerce business. We sell 90% of our products direct through our website, which is on Shopify. So that is where the vast majority of our sales come from.
So what we really want to talk about in this episode is kind of our sales margin per order. A couple episodes ago, we talked about margin and pricing for our products. Now what we're really talking about is our sales order margin. So one of the tasks I do every month in closing is I run a margin report for every single order that we make.
And this is like thousands of orders.
Yes. So I literally do the calculation for every order. I do that in a spreadsheet and I accumulate all of them and I bucket them in different margin perspectives to understand what's driving a low margin sale or understanding what's driving a high margin sale.
I'm not good at Excel and spreadsheets. Like you have mad skills in Excel. Like someone that struggles with Excel like me probably won't be able to set up the worksheets that you have going on.
I would try and understand Excel a little bit more because what this can do, to give you an example of how we used this before. When we first started getting some volume and we're at a 3PL, we had done second sales, meaning we had products that weren't up to snuff and had to be sold at a discount.
Right, that's slight imperfections, cracks,
right,
bubbles.
So something we didn't want to sell at our premium price. What we did was we bundled them together in a set of 3, gave them at a discount. So you'd get them basically at wholesale. What happened was as we were doing these margin per sales calculations, we figured out that our sales margin on this was a negative sale. So while it looked like we were getting all this money for selling our distressed items and getting our cash back, it was still actually costing us more than if we had just thrown them away.
Yeah, the shipping killed us.
The shipping killed us. When we bundled them in a box, it was at a huge discount to try and move them. And the shipping cost was so expensive that it just eroded everything away of the margin that was left.
And you have to explain too, we were at a 3PL, which is a third-party fulfillment company. So they do all of our packing and shipping for us. And every time they would pack an item, we would pay a fee for it.
Yep. So one of those fees was an initial pick and pack fee, which was $2.50. And so we were not making enough money on this distressed item that it was actually costing us money to sell it.
That hurts when you figure out something that you thought was working was actually costing you money.
Yep. And so that was something that came to light by doing this per sale margin calculation.
Gift sets. This really showed us what we do. Like for Christmas, one year, I spent a fortune on these beautiful, big custom gift boxes because the order at that point was over our threshold for 3 shipping. It was over $89. So Fontana, our company, paid for the shipping for the customer. We lost money on those.
Yep. And we didn't know that until we did a complete order calculation. This is an extremely important exercise to do as you are building your business and as you are adding new products, as you're adding bundles, as you're subsidizing shipping, as you're adding custom items. You need to understand every cost associated with fulfilling your product.
Like, for example, with different items, we sell bath soaks. Those things are heavy.
Yep.
Those salts are heavy. So we know our shipping costs on those are going to be higher because they're heavier.
One of the things that we'll post up here is our spreadsheet. And I wanted to really highlight it on 2 different types of sales. The key thing that I want to show on this is driving your cart price higher.
Your AOV, average order value.
In our first example, we have 1 candle. We're selling it for $26.99. We're going to say our cost to sell that item is $5. Our shipping label cost is $8. Our box to ship that in is $1. The dunnage, all of the the fill, the peanuts, the corrugate wrapping, all that included is 50 cents. We're going to say it takes 75 cents in labor. And let's say this sale had an affiliate commission of 10%.
So we do have an influencer program. So if our influencers sell a product, we pay them commission.
Yep. And so we're going to say that this is the case in here. So for a $27 order, they're going to get $2.70. When we look at the P&L for this order in specifics, we have a $26.99 revenue line. So we made $26.99. If we add up all of our costs, the cost of the candle, the cost of the shipping, the cost of the box, the dunnage, the labor, and the affiliate commission, we had $17.95 in total costs associated with that sale. Now, our margin with that is $9.04, or a percentage is 33%.
I do have a question. So for shipping label costs, on our website, when the order is less than $34, the customer pays for the entire shipping label cost themselves.
That's right.
How is that calculated in?
So that's a very important call out. And that what that means is it's the sales price is your total revenue of the sale.
Okay.
So every piece of revenue has to be included. And so if it's $8 in shipping costs, we're going to assume that that $26.99 includes the shipping costs paid. So these are completely made up numbers, but I wanted to highlight what that is. That sales price is
the candle plus the shipping.
Exactly. Is everything included. If you look at that and you say $5 is your cost of goods and your sales price is $26.99, if you were looking at your straight margin that we calculated in our episode a few times ago, you would look at your cost of goods sold of $5 and your sales price of $26.99. That seems like it's an 80%-ish margin. But in reality, with all the costs associated with this sale, your margin is actually 33%. So a huge difference in your raw material costs margin and your sale price of your product versus what the actual orders margin was. So the difference is, what are the costs associated with fulfilling your orders? The importance of driving that cart price up to amortize those fulfillment costs over more revenue is extremely important. So to give you an idea now, so we're going to do 5 candles in this next order. If we assume everything the same of $26.99, I know there's going to be some shipping difference in there, so everything else, just assume that we're doing 5 candles and now our sales price is $134.95.
So your candles plus your shipping.
Right, exactly. So our total revenue of this sale is $134.95. Our cost of goods is now $25 because we're just doing 5 times 5 is 25. Our shipping label cost, let's say it's up a little bit more because it's a little heavier. So instead of $8 for 1 candle, it's $10 for the 5 candles. Our box, we're going to need a little bit bigger of a box, so we're going to add 30 cents to get a bigger box. Our dunnage, let's say, is up 75 cents because we have a couple more pieces of corrugate. Our shipping, labor, let's say it's $1.25. And then our affiliate commission, we're keeping at 10% of $13.50. What we want to do is then we're going to take our revenue line of $134.95. We're going to add up all of our costs of $51.80. So we're going to take our cost of goods sold, shipping, box, dunnage, labor, and affiliate commission. And then we're going to get our margin. We got an $83.15 margin, or 62%.
Much better.
Much, much better. The reason why is when you look at our candle price of $26.99 versus all the other associated costs with it, like our shipping, our boxes, and all that other stuff, we are trying to cover those costs with such a smaller revenue that 1 unit sale doesn't really do much for us.
We hate one item sales.
Yes,
like they hurt.
They hurt.
Yes.
They hurt because you are doing so much more effort for 1 candle versus the minimally marginal higher effort for a larger order.
I mean, when we were at the 3PL, every time we had a 1 candle order, we lost money. And we knew that.
This is where it's really important to understand your order margin. Don't just look at your product and the cost of goods sold with it. This is what you really need to understand. You need to understand what you're making per order to help you drive what to sell.
And this really helps your marketing strategy.
It does.
For me, we know that we want to drive larger purchases. We want to drive up our AOV. When you look at your marketing strategy, what are you going to do to drive up that AOV? Are you going to add accessories like a wick trimmer or matches, a lighter? Like, what are you going to do to bump up that cart value? You can offer bundles. That's a very popular one for us. Bundle 4 candles and save 15%. Anything to drive the consumer to order more on every purchase.
And this also helps you understand what your promotions are. Exactly like you said. Do we do more bundles? Can I offer free shipping or subsidized shipping? And if I can, at what price points can I do that? If you understand where your margins per sale are and understand how that can help you set your price points for free or subsidized shipping, this will tell you where those price points are. This is going to help you understand where you can drive more sales dollars by giving incentives.
And I'll tell you flat out, consumers don't want to pay for shipping anymore with Amazon Prime effect. So if you offer free shipping over a certain threshold, it will drive up your sales.
So the key to this is understanding how to amortize fulfillment costs over a larger order value.
Smaller makers might say, it doesn't matter. It's just me packing up my orders. Does this make a difference for the smaller makers, or is it really as you begin to scale your business?
I mean, yes, of course it does, because while it might not be cash out, you better consider paying yourself in every single task. Whether or not that's cash out the door or not, you still need to understand what that cost is. So as you grow, you can plan for it, budget for it, and hire somebody to do it. Because when you are running your company, you are not going to be packing boxes.
To scale, you can't be packing
Exactly
your
right. So you need to understand what those costs are. Even if you're not paying cash for them, you better understand how long it takes you to pack a box, what your hourly rate is, and then understand what your labor cost is per order.
When you're setting up your policies and procedures, your SOPs to pack an order, make sure you streamline your processes so you're as efficient and quick as possible. So you're not wasting all your time in shipping labor.
Let's say you've done this exercise now, you've pulled all of your orders, you've done the margins per order. What do? You don't go through every single one. That's going to take forever. What you need to do is you need to bucket them and say, okay, where are my margin breaks? So anything below 50% margin, I need to understand better because I need a 50% margin on my orders. So what do? You sort your column in Excel of any order below 50% margin, pull out for me. Those are the ones you start to investigate. When it's below 50%, okay, I pull those all out and I take a look at them. The next step I do.
What happened here?
Exactly. Yeah. How did this happen? The next step that I do is I kind of look at any order value that's below $30. If it's below $30, I know I'm making a poor margin. I just know that that's going to be an issue. I don't have enough volume of order dollars to cover and amortize my costs over. So I know our margin's going to be small. If that's not the case, so I get rid of all of those small orders. And then if I have something above $30 and below a 50% margin, now I'm really starting to look. If I have an order for $100 and I have a 30% margin, something doesn't seem right there. And I need to investigate what's happening. This is the process we went through when we were trying to sell our second items as a bundle and had huge negative numbers. I couldn't understand why our entire average margin was lower, but by culling all these little pieces out of the below 50%, below $30, I was able to see where our margin was being depressed by specific sales. This is when you start to investigate. This is when you go into Shopify and say, okay, tell me exactly what happened with this order. For example, today we are selling Harmony melters. We're selling wax warmers. Yeah. What we're trying to do there is when we sell those, we have a lower margin. Why? Because it's an expensive item that gets subsidized shipping and it goes in a bigger box, which costs more. So I know when we sell a melter, we have a lower margin. So right now what we're trying to do is decide, do we just get rid of selling melters or do we bundle them with other products? This is something that we need to look at and that we are currently trying to understand as we break down our per order sale. As we add new products, as we add new items, we have to figure out what those margins are and how they're changing our per sale order value.
Can I ask you a question about different platforms and the fees involved?
Yeah.
Like our Shopify fees. Do you have any opinions on those versus other platforms? Or where do they fall in this calculation, I guess?
That is a tough thing. So in the sales price, it should actually be called our revenue price. Yes, this is a very elementary spreadsheet that you're going to see on YouTube. Basically, what you want to know is what is your total revenue per sale? Yes, include everything. Shipping income, taxing income, Shopify fees, everything. What kind of dollars did you bring in? If you include sales tax in that, that's not income. But if you include sales tax in the revenue, make sure you put the sales tax obligation in your calculation as well. So it's a 1-for-1 in and out. Because what we want to do is understand what is our total revenue received and exactly the cost associated with fulfilling that. Everything is included, and then you can do your margin calculation. And that's really important for any platform, is understanding every single cost associated with it. Whether that's you're at a 3PL and they're doing fulfillment costs for you, picking, packing fees. If you're on a selling platform, much like we're doing with our affiliate commission here, if there's a fee associated with it, a commission, make sure that is calculated because that is going to really change your outcome.
Yeah, we can't talk about every instance here because every business is completely different.
It was completely different. The biggest thing that you need to take away from this episode is understand the total revenue received per order and understand every single cost directly related to fulfilling that order.
Talk about we are getting ready to launch on Amazon and it has taken us 5 years to talk ourselves into this because we know our margin is going to suffer.
Yes, we lose about 30 margin points by going to Amazon.
As we do this, I'm sure we will have an episode. I mean, we launch on Tuesday. So today's Saturday. We launch on Tuesday on Amazon. So I'm sure in the future we will do an episode on Amazon selling.
So to recap, understand your total revenue received per order, understand every direct cost related with fulfilling that, understand what your margin percent is, and then bucket them, all of your orders, by margin, and break out all the orders that are below your required margin and understand why or what the drivers were for that depressed margin on those sales. That's going to help you understand your fulfillment a little better, understand your sales volumes coming in and your order types coming in, and help give direction on what to promote and how to bring an increased AOV to your business.
All right, subscribe and follow along for more e-commerce success tips so you can build a 7-figure e-commerce brand too.